They're trapped between inflation and austerity. They're trapped between, if they raise rates, they blow up the system. And if they don't raise rates, and again, that would be to keep inflation in check. And if they don't, which they won't, you're going to see inflation, I think, just get out of control. And even if the budget was balanced today, we still have nearly 200 trillion in funded and unfunded liabilities that need to be paid for. We are a country that is addicted to spending, period. And at the level of debt creation, they have no choice but to lower rates. The whole system is on the verge of breaking apart. They will do what all governments have done since the beginning of time, and that is acquiesce to inflation. There's all this talk of the massive insider selling and Buffett selling $71 million worth of Bank of America shares and dumping his Apple shares. And the insiders see something coming, no question about it. And the Fed is late in all of their actions. This will be no different. We are not out of the woods yet, and a 50-point or 75-point decrease in interest rates isn't going to do much for it anyway. I think one of the things that's worth mentioning, everyone focuses on how good gold has done and laments at silver's performance, and I think that's part and parcel with the way that we
Welcome to the Economy Express channel, your trusted source for financial insight and market updates. Tonight, we're tackling the urgent warning from renowned economist and financial analyst Peter Schiff about the brewing storm in the global economy. Rising bond yields, skyrocketing commodity prices, and persistent inflation are setting the stage for what Schiff describes as economic chaos. Let's dive into the details and explore what this means for investors like you.
Expect markets to behave these days. We've seen such massive increases in prices that happen so fast in tech and in crypto that we don't really notice. But look, silver's rallied by over 100% since its low in 2020. It's up, 105, 110% from its low point of under $12 an ounce. And I think that probably comes as a surprise to people who are just following silver kind of passively. Watching gold at $2,400 an ounce. Silver will have its day, no question about it. And I think, guys like Warren, I'm sure they notice very well and understand very well gold and silver and probably have a significant position in it, just don't tell the world about it. They make their money he makes his money on equities. And so I understand that. But I think for him to expect him to not understand it. Look, gold has outperformed the S&P 500 even with dividends reinvested for 25 years. It's averaged 9.9% compounding since the beginning of the century. That's outpaced just about anything Warren owns. And I think it would be foolish to assume that he doesn't own any. He may not talk it, but when you have the wealth that he does and your influence is centered around traditional assets and securities in American corporations, that makes sense to me. But don't be surprised if he and others like him have nice stashes of gold and silver physically held safely away somewhere to protect even his large stack of cash. So I guess we'll have to see if he's going to add any to Berkshire Hathaway looking for a value. You sure think he'd find some in the mining shares. I know he's added mining shares before. I don't know. I haven't looked lately to see if he has any in there now, but geez, I couldn't think of a better place to find value for a value-based.
First, let's talk about the bond market, arguably the canary in the coal mine for economic troubles. The yield on the 30-year U.S. Treasury has surged past 4.9%, with the 10-year yield hitting 4.69%. These are the highest levels we've seen in years.
Day to day. I think people, Chris, realize that things are beginning to break, and they realize that a sell-off like this often happens counterintuitively. I never know what to make of it. People say the conventional wisdom is that you throw out the baby with the bathwater in order to meet, for example, margin requirements. And if you look at the unwinding of the carry trade, it would certainly, with the yen strengthening the way that it has been, it would elicit margin calls on these levered positions. And whether or not it's people selling their gold and silver because it's so highly liquid, or it's just the cartel's way of continuing to step on things, to make the perception of gold and silver being the place to run, kind of trying to sever that relationship, which is more along the lines of what I think people are seeing through that. The tricks and the methods that have been used for a very long time, I think, are growing long in the tooth, and they are becoming far more transparent to the investing public. And I would say today's been one of the busiest days we've had in months, literally, maybe even going back to last year when we had the banks fail. People are not dissuaded whatsoever. In fact, I think they're quite incentivized to see the value that is found here in a price that clubbed. Although it's interesting with gold, it's back above $2,400 and only down a little bit right now. The futures I show only down $23.50. They were down as much as 70 plus earlier this morning. And so I think that this is a short-term knee-jerk reaction, but I don't think we're out of the woods yet in any respect as to how this all plays out. One other note, I think it's important when we talk about what gold is doing. And when you look at it in the light of Japan, where it looks like by all intent and purposes, the wheels appear to be coming off. 10 years ago, an ounce of gold was about 140,000 yen. 5 years ago, it was about 150,000 yen. That's a 7+% change in 5 years. It was 200,000 yen in 2020 and roughly 250,000 yen in October 2022. In 18 months from 2020 to 22, the price of gold went up $25 in yen. It spiked to 278,000 yen in July of 2023. And as of just the other day, not too long ago, just a couple of days ago, we were over 383,000 yen. That's 38% increase in 1 year. So you can see as the yen has really gotten into trouble, gold has done what it is supposed to do, and it has gone much, much higher. So I'm not worried about where gold and silver end up. I think this knee-jerk reaction is exactly the way our clients are reading it, and it's a subsidy, it's an opportunity.
Welcome to Economy Express, your go-to destination for all things economics and finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing...
To put this into perspective, this spike in bond yields directly translates to higher borrowing costs across the board. Mortgage rates are already above 7% and climbing. Schiff predicts they could soon exceed 8%, adding strain to home buyers and putting further pressure on the housing market. Credit card rates, already a staggering 25%, are expected to rise even higher. What's driving these shifts? Inflation is not only alive and well, but it's accelerating, and it's being fueled by a dramatic surge in global commodity prices. The CRB Commodity Index, which tracks a basket of key goods, has climbed over 28% in just 7 months. This puts the index at a 14-year high, and the momentum shows no signs of slowing. Oil, for example, is trading above $74 per barrel and looks poised to head higher. But it's not just oil. Agricultural commodities are also on the rise. Coffee, sugar, corn, soybeans, these essential goods are all seeing significant price increases, pushing up costs for businesses and consumers alike. Now, consider this. These price surges are happening despite the dollar's relative strength on the global stage. In fact, if the dollar weakens, a scenario Schiff believes is inevitable, commodity prices could rise even further. Schiff points out that in regions where currencies are weaker, such as Europe, commodity prices have already increased by over 30%. So why are central banks claiming that inflation is under control? Both the Federal Reserve and the European Central Bank have been touting progress toward a 2% inflation target. Christine Lagarde, head of the ECB, even went so far as to predict a bright 2025 with inflation comfortably down to 2%. Schiff dismisses these claims as overly optimistic and disconnected from reality. He argues that central bankers are ignoring the very real and very visible warning signs, like rising commodity prices, that inflation is far from defeated. The bond market is already reacting to this disconnect. Higher yields signal that investors are losing confidence in the Fed's ability to manage inflation. The latest data doesn't help either. The ISM Services Index, a key measure of economic activity, showed a sharp rise in prices paid, reaching its highest level in 2 years. Meanwhile, job openings unexpectedly jumped above 8 million, reflecting misplaced optimism that economic conditions are about to improve. And then there's gold, a critical safe haven during times of economic uncertainty. Schiff sees gold as one of the best investments in the current environment. As inflation erodes real interest rates, gold is poised to shine. Central banks around the world are reducing their reliance on the US dollar and increasing their gold reserves. Schiff believes this trend will continue and advises investors to do the same. He predicts an explosive rally in gold and silver prices in the coming months, driven by growing concerns over inflation and currency instability. Schiff also highlighted the broader economic adjustments needed to address these challenges. For the U.S. to achieve lower inflation and rebuild its manufacturing base, Americans need to save more and spend less. However, this would require a painful economic transition, including a likely recession. Schiff argues that the U.S. economy is overly reliant on consumption-driven GDP, which isn't sustainable in the long term. In closing, Schiff warns that the Federal Reserve has already lost the battle against inflation. While they may slow down rate cuts, they are unlikely to reverse course and hike rates significantly. This failure to act decisively will lead to further erosion of the dollar's purchasing power and a growing appeal for alternative assets like gold. So, what does this mean for you as an investor? The key takeaway is to prepare. Consider hedging against inflation by investing in gold and silver, exploring undervalued gold mining stocks, and looking toward emerging markets for opportunities. The global economy is at a crossroads, and staying informed is your greatest tool for navigating these uncertain times. That's all for tonight on the Economy Express channel. Stay tuned as we continue to bring you the insights you need to stay ahead in today's rapidly changing financial landscape. Thank you for joining us, and until next time, keep watching the markets and your investments closely.